Hello, Viv. Viv is our fearless graphic designer who has made our shirts and stuff. So nice to see you.
Oh, great.
Yeah, I people are like, do you know most people in your group? I'm like, I try real hard. 13,000 now, but I'm getting there.
So impressive.
I'm getting there. All right, let's start off, everybody. Laura, do you want to do a quick intro on yourself, who you are, what you do?
Yeah, of course. Yeah, so my name's Laura. I'm CEO and co-founder of PolicyMe. We're a digital insurance company looking to make life insurance easier and more affordable for any Canadian who needs it. I've been in the life insurance industry now for well over 10 years and know quite a bit about it. So I'm excited to be here and talk about that topic today.
And because we talk about careers all the time, was it your deep desire as a 15-year-old to become the COO of a life insurance company?
Definitely not. Funny enough, really stumbled into this. I was definitely more apt on like the math side. I ended up at the University of Waterloo. Then once you're at Waterloo, there's a few different kind of degrees you can get in the faculty of mathematics, actuarial science being one of the most popular ones, which then it's basically the statistical models behind pricing risk. One of the biggest practical applications of actuarial science is the life insurance industry, which brought me kind of into this world. I didn't end up focusing on actuarial science. I went into management consulting in New York for 5 years, where I spent a lot of time advising big insurance companies, but still just found myself in the insurance space, kind of fell in love with it, and then ended up starting a company in that space too. But I can say with certainty that this is not what I expected to be doing at 15. Yeah.
Okay, so maybe you can tell. So, like, I know about PolicyMe, but do you want to tell because you're a Canadian tech company? Tell us sort of like how PolicyMe came to be and what your goal is. Because
Yeah, of
you're doing the work.
course. So as I said, I have spent a lot of time in the life insurance industry. So had my co-founder and our CEO, Andrew. We worked together in New York, advising some clients in the life insurance space. And we kind of looked at the space and just realized there were so many, it was just riddled with issues from very, very legacy and lack of technology, making the process easier. Little transparency for consumers, a lot of salesy practices that we didn't tend to agree with, mainly due to like just poor incentives laid out within the business model, and just kind of looked at it and said, there's so many things we can fix here. If we're going to work in the life insurance space, I'd rather do it in a way that's delivering kind of value back to our clients and our customers, and not in this kind of poor model that we see in the traditional insurance industry today. So we were both Canadian. We started the company with our CTO, who happens to be my brother, who was also in New York at the time and came back to Toronto to start the company with us, and have been we started in 2018, so we're just over 4 years in this journey. And it was an easy kind of goal that we had from the beginning, is just making life insurance easier and more affordable for Canadians. We knew there was so much kind of glut in the current industry, and we're very excited to deliver some of that value back to customers. And now we're exploring things even beyond life insurance, so really excited to share some of those ideas that are coming out as well.
And your little one is how old?
Maisie is 18 months, so I had her while also starting a company, so they're kind of my two babies. But yeah, she's amazing. It's been such a joy being her mother.
Yeah, I started Moms at Work, and then like 4 months later found out I was pregnant with my third. I was like, oh,
Yeah.
this is like perfect timing. It's like that's exactly what I need to be doing, is launching companies and being pregnant. That's great.
Yeah, yeah, it's a
Yeah.
crazy time to start a company, but you never have those opportunities. There's never a good time, really.
Yeah. No, it's
You
not. And
figure it
how,
out.
so we're going to get into life insurance. How many employees do you have now?
We're about 45 at
Yep.
this point. Yeah.
some significant growth. And do you have some Moms at Work members who work for you?
We do. I don't know if there's anyone that I'm not sure, but I know Bronwyn
Yep.
Pineapple is definitely very active within your team. We sponsored her membership to the collective, so I definitely know she's a good friend of yours and
Yep.
very active within that group.
So just so everybody knows, we have a female co-founder who is also a mother of a Canadian tech company. Like the don't exist. So that's why we were very excited to have Laura here, and why we're very excited to support female-led teams. So life insurance. You've been in life insurance for a long time. Can you just break it down? So everybody's like, okay, well, like, what is life and like, how does it work? Like, nobody
Yeah.
actually wants to have that conversation. But yes, what is life insurance?
Yeah, I think the easiest way to think about it is kind of a contractual promise with a life insurance company that in return for paying kind of monthly premiums, somewhere it tends to be around $30 a month, they will promise to pay your loved ones or your family, whoever it is that needs the money, a kind of like one full payout tax free if ever you pass away. So similar to most insurance
Tax
products.
free, right? Tax free.
Yeah, tax free.
Good.
Yeah.
Thank you. Yep.
Similar to other insurance products, like the claim is triggered upon an event. In the case of life insurance, it's triggered upon a death, unfortunately. Yeah.
So again, like we're gonna get into like really how it works, right? Because that's the like differences. But really for this group, I was like, there's certain points in your life that you need life insurance, right?
Yeah.
Maybe not when you're older, but like this is the time now, right? Like this is the time.
Yeah, so something that's super counterintuitive with life insurance, and I think it's hard for some people to wrap their head around, is like you don't actually need it when the likelihood of death is imminent, which is just, it seems counterintuitive because it's like the timing where people are most exposed is actually when it's probably least likely that they're going to pass away. So it's not in your 60s and 70s where you're very likely to claim, not very, but you have the like a higher
More
probability
likely.
of claiming.
Yeah.
But it tends to be kind of like in your 30s, 40s. Our average age is somewhere around like 35. And this is where like you really are exposed. Think of me, I have a mortgage, I have a young child. My spouse and I obviously went into these financial obligations like getting our home with the expectation that there'd be two incomes to kind of support paying off the mortgage and to cover our expenses. And if either of one of us were to pass away unexpectedly, like that would be a huge financial burden that would be very difficult to overcome without the help of a life insurance policy. So it's usually in those core years when debt is at its highest, and there's also like children to support, or could be aging parents, or could be children that are like financially dependent on your income, that where you'd like kind of really need life insurance. When pre those years, like when you're single and don't have financial dependence, like for most people that's not a time in their life they need life insurance. And then even vice versa, once you're getting to a place where your debts are being paid off, your children are more financially independent or close to be financially independent, again, that's a time in your life where life insurance doesn't become as important. So it's in those core years where it does feel like there's just a huge burden from like a financial component in front of you, which is typically when young families when they're thinking about life insurance.
So here's the thing, everybody goes into the bank or whatever, they get this giant brochure of like the 800 types of insurance you can get. Okay, right? Like, so let's I just want to break it down like really quickly for people. Difference between, this is my thing. So term versus whole versus okay, how do you know which kind you need? What the heck is whole versus term, right?
It seems to like pop up everywhere, so it is
Yeah.
a very confusing product. And it's one people just, like it's not a fun topic to think about, so
No.
it's also like a very easy one to avoid, given that it's so complex. But that's one of the things we're trying to address is just really allow people to own the journey, get their education, and self-serve a little bit more, so it doesn't feel like they're being pushed into a product. But generally, there's two main types of life insurance. One is called permanent and one is called term. Permanent comes in two forms that are probably people would recognize more, which is whole life and universal life.
Yes.
Those are the two main categories. When it comes to permanent insurance, it goes against what I just said, where it's like people need life insurance for a period of their life, but they don't need it forever. Permanent life insurance covers you forever. It has some benefits from oh, sorry, I just had the chat pop open, but we're going to jump into the chat questions later,
Yeah, yeah,
right?
we will. Yeah, we'll
Okay.
do that. Yeah. People drop them in here because they're like before they forget, right? Like,
That makes sense. Yeah, yeah. It just took over my screen. I was like, oh shoot. So with permanent insurance, yeah, you're covered forever. It has a small benefit to people who are like maxed out on all their tax-free savings vehicles, and they really need to speak to a advisor. But that's typically for very, very high net worth, and even then, I really question the value of those products. But they are extremely expensive, usually 6 to 8 times the cost of term insurance. You could be looking at in the hundreds of dollars a month. They're extremely inflexible, meaning if you ever need to pull some of your money out of that later, there is like cancellation fees. There's a lot of tricky like things to navigate around those products. And they're just not intended for the purpose that we typically think about life insurance, which is like income replacement, right? And it just doesn't make sense for that purpose. So we always recommend term insurance. There is the form of term insurance which is called mortgage insurance, which also exists, which a lot of people may have come across if they have bought in a home, where they're asked if they want to opt in or opt out of the mortgage insurance part of the loan. Again, that's a form of term insurance. It has its flaws. It's not fully underwritten, meaning like the rate of declines are much higher than term insurance. In term insurance, it's very unlikely that you would ever get declined, just because the trigger, as we said, a death is not something that's easy to cause, like to fake or so it's just
pretty
it's
difficult to
fully
figure out.
underwritten. You're looking at the full health history up front. People are like heavily vetted before they're even approved for this product, so you can be a lot more confident once you claim that is going to be approved. Whereas with a mortgage insurance product, where it's just answering 2 or 3 questions, checking a box, you are at risk of like maybe not having read the full fine print or not actually being eligible for the product. So that's one issue with mortgage insurance. And the other one is, again, it's just a lot less flexible in terms of kind of the term lengths associated with it. Some of them are just tied directly to your kind of 5-year mortgage loan. And other ones are other issues that the actual payout goes down because it's tied to your mortgage. As you pay off your mortgage, the life insurance payout would go down because it's tied to the value of your mortgage, which is just it's a bad cost savings, because for about the same price or even cheaper, you could just have a flat payout with a term life insurance policy.
I
So
think the thing that most people need here is that sort of like income replacement. So
yeah,
let's
exactly.
say we'll focus on term life insurance because it's like the easiest one to like get rid.
Yeah, yeah.
So let's say I'm going to ask the hard questions, right? So how much coverage does a person need? Like just the easy stats.
Yeah, yeah.
Question. How much
I
do you need?
mean, that one is, I mean, it is very dependent on your situation, like how much you make, how much your spouse makes, what your outstanding debts are, but at the same time, what your outstanding savings are. There are some rules of thumb, like 10x income. You could use it. It's not great. I think it typically is very, very conservative and would encourage you to overinsure. As a plug, we do have an advice calculator on policeme.com that you could go to, which has a more sophisticated algorithm that kind of produces that personalized recommendation for you. I would say if you think of kind of your monthly expenses, take out kind of think about how much your income is contributing to those monthly expenses, take that away, multiply it forward by a long number of years and many months, you would get to somewhere around, for the average person, you're looking at like $400,000 and $500,000 of coverage. But again, it does depend on kind of what your situation is and how much your monthly expenses are and how likely you want to hold on to that lifestyle if your partner were to pass away.
Well, and for everybody here who's mostly moms, I'm going to say, I'm like, personal side note is that we got life insurance. Like my husband ended up with pulmonary embolisms at the age of like 40 or whatever. And like, it made us seriously consider, like, because not having another caregiver, right? Like, so like you calculate your salary, you do whatever, but we rely on the other person to pick kids up from school or to do whatever. I'm like, so then we added those costs, which are not calculated in my salary and not whatever, but to like get that support for the other person if they don't have, if your partner's not there, like that cost for is substantial, right?
Mm-hmm.
Like, because we're not paying that out of pocket. So it was an interesting add-on just to be like, there it is.
Mm-hmm.
Okay, so the other thing is we're gonna do the two ones because this always comes up, right? Can you still get coverage if you have a pre-existing health condition? And do you require a medical exam and like what does that involve? Because
Yeah.
I haven't had that one done, but I'm interested to know.
So pre-existing conditions, I mean, I wish I had a perfect answer here. It is a little bit nuanced. For the most people, once they reach age 40, 45, have like some sort of medical history. Like, let's just be honest, most of us go through a health scare or something. And what I can tell you is still, even at those ages, we're approving 80% of people. So there is a very significant threshold for what kind of medical conditions are eligible and underwritten against. It's very generous. Obviously, there are certain situations where you could be declined. Example is if you have like a really recent diagnosis of cancer, for example, and still undergoing treatment. They may say that they'd like to see, some amount of years of stabilized condition, and you having recovered, until they're willing to kind of insure you. There are some simplified products on the market which you could get in the meantime. I wouldn't suggest kind of getting a whole life product or something like that. At that point, it'd be extremely expensive. But if you want some coverage, typically there are like guaranteed issue products on the market. But I would say it's a very high likelihood that you would be approved with a pre-existing condition. It just depends exactly what that is. In terms of the medical exam, that's the one thing that, when talking to customers, it's just like so obvious that they just don't want to do this. It's intrusive. I mean, life insurance applications already feel like a financial and health strip search. Like they ask you about everything. So also needing to have blood and urine samples taken is like a pretty painful journey. What I will say is we are on a mission to like really, really minimize this as much as possible. At this point, I'd say well over 70% of our customers are able to get approved without a medical. There are still cases, specifically when you're applying for a really high coverage amount, like over $1 million, or if you're over age 51, these are places where we will just by default ask for a medical exam. And then there's certain kind of BMIs, for example, that might trigger a medical exam. But we are trying to minimize it as best we can. And today, as I said, we do offer no medical for kind of well over 70% of our applicants.
All right. So is being pregnant considered a pre-existing condition?
No, definitely not. Yeah, no
And I was like,
issue
I don't know. That's a good
applying.
question. Yep.
No issue applying while pregnant.
Okay. So then the other question is like, so say you've got two people and do both parents need life insurance, and like should it be different, right? Like should it like should,
Yeah. Again, it kind of depends on the situation. I mean, an extreme case would be having one breadwinner and one, maybe it's a caregiver or someone who isn't earning an income. And in that case, I would say like it's likely that you wouldn't need the same amount. Obviously, if the breadwinner were to pass away, there's a high likelihood that, the financial repercussions of that would be significantly more. Although, in the same way, as you said, like if a caregiver passes away, it's no joke. Like the expenses of childcare are very expensive. So I think you could kind of optimize in order to save on premiums to maybe reduce the person who isn't the breadwinner. For a lot of people, though, they are looking to just get the same amount across both people in the couple, just to kind of make it easier. If it's affordable enough, if you're in your 30s, you're looking at kind of $30 to $40 a month. So most people are willing to swallow that and just kind of get the same amount just for ease and like flexibility there.
okay, here's the other question. I'm like, and everybody's got to know that most of these questions were like my questions, because I'm like, I did work in insurance and I still
Yeah,
don't, I still don't know the answer to some of these questions, right? Because like Laura's, everybody, I want you to know, like Laura's right. It's like, it's ridiculous to try and be sold something by people who don't know anything about you or whatever. And we will get into how PolicyMe works. I did do the application. I did online. I was like, okay, that's probably how that should have been. Because when we applied, it was like some dude on the phone for 4 hours, like
Yeah.
really asking us all sorts of things. My question is like, you see insurance for kids, right? They're like, oh, you should insure your kids. Like, do people need to get life insurance for their kids?
Yeah.
Like, yeah.
It's a very complicated topic. In my mind, it's like oversold way too much. It's one of those products that have like good commissions on them and like high margins for the insurance
Hold
company.
on. Wait, so people don't know this, right? When people sell life insurance, they get a commission on what they sell you, right?
Yes, they are 100% incentivized to sell you more, sell you longer policies, sell you anything that's more expensive. Because it's 100% commission is tied to the premium that you pay. So it's a percentage of kind of what you pay is going to the person selling you that insurance.
Yeah, just wanted to make everybody really clear on that,
Yeah.
because I think that that's something that's sort of purposefully like brushed under the rug, that it's like, no, they're incentivized to sell you the products that pay them the most commission and that will get higher like that's a thing that happens. So let's not walk away from that. Okay, so I think that we've covered the basics then.
Yeah.
And we're going to get into questions, but so let's say, and we're going to focus on PolicyMe. It's like, so how do you apply for policy, and like, what does that process look like with you folks specifically? Because I did it and it was different.
Yeah.
Like it was different than what I was used to.
Yeah, so it's total digital application. So you can go on our website. You can just get resources, which I would encourage everyone to just take a look at some of our blog and learning centers. Bronwyn in particular is kind of the editor and works owns our blog and content, so you can trust her to be a safe pair of hands there. But you can get that resources. But if you're looking just to kind of quickly apply and get the insurance, you get a quote, you choose your coverage amount. We'll tell you kind of your estimated price up front, and then you'll go through a 10 to 15 minute application process. It's digital. We try to make it as fun as possible, asking you about kind of your financials, your some of your hobbies. Obviously, if you're a skydiver every weekend, you're a little bit riskier to an insurance company. We'll ask you about any high risk around kind of like if you've had any DUIs or things like that, which again could just trigger a little bit more risk to as an insured. And then we'll ask about some family health history and your health history. Once you go through that, you'll be given a decision for, I think it's now close to 50% of our applications will be approved on the spot, meaning you'll be told, great, you're approved, here's your price, and in about 5 more minutes, you can pay for your policy, sign your policy contract, and have it settled and enforced. If you are someone that may have like a little bit more complicated hobbies or profession or health history, we may direct it to one of our human underwriters. So they will look at
Human
they will
underwriter.
look at your application. They may request, a medical, as we said. For some people, they do need that nurse visit, or they may request some extra clarification to your questions, whatever that may be. But we'll direct you through that with you'll be given a dedicated advisor on our side, who is not commissioned, salary based, and they'll help you kind of navigate that process if you do have additional requirements. But similar, as soon as you're approved, you can go and kind of pay by credit card, get your policy signed, and get it enforced in a really
So
quick.
I will tell people I filled out the application. It took me, I timed it 11 and a half minutes.
Nice.
See? Okay. So
Right.
I was like, I want to make sure this isn't a 45-minute thing. If I
Yeah.
start, then my kids will scream, someone will knock something or hit someone. So it is streamlined, right? And it's got like check boxes and you just go through and pick like the things on your phone. It like scrolls this way, I think.
Yeah.
Yeah, exactly. And then at the end, it's like, well, this is the thing you need. I tried a few different because they gave me a passing, but that's right. Like, and having done it the other side, you can't do it unless you have someone handhold you through the thing. He literally read me off questions for like 45 minutes. I want to poke my eyes out. Yeah, it was weird, but this is definitely the way to go. And like, I'm not selling, like, that's not the thing. I'm like, but for parents, it's I'll be true. I did it while I was at my kid's soccer practice. Okay. So like, and I was like, yes, sweetheart, I'm applying for life insurance.
Nice.
So that's where we start with there. The one thing that I did notice is that like PolicyMe is doing a bit different in terms of like affordability too. So that was sort of like, how do you do that? Because it's at a lower cost, right? Like
Yeah. I mean, it's the answer is like through just that technology stack. I mean, when in a typical insurance company, your application is going to be just going through a lot of processes to get approved, and including like expensive nurse visits. Most insurance companies don't have the rate of straight through approvals as we do. So, and it's obviously very expensive to get a nurse to come to your home and take blood and get those processed in a lab and sent back, and go through the whole underwriting process. So by simplifying the underwriting process, we're able to take a lot of cost out of the system and just pass it back to our customers. So we have been able to go kind of 10 to 15% cheaper on average than the market. Not always the case. It kind of depends on your specific age and kind of coverage amount, but on average, we are about 10 to 15% cheaper than the market.
And this wasn't our list questions, but like, how does it, so you're like almost like do you work with different insurers to come up with these packages?
Yeah, so we built an exclusive product with two partners, an insurance carrier called Canadian Premier, and then a reinsurance partner called RGA. So together, the three of us kind of have built this exclusive customer journey. In technicalities, I think we would be like called an MGA with underwriting authority, but in we all work very closely together. We own the customer experience and the administration of the policy and the servicing of the policy. So if you have any questions or changes after your policy is settled, you'd be working with one of the PolicyMe reps to help support that. Yeah. But we don't have the balance sheet, which is a big part of kind of being able to, and we're not a regulated entity. That's where our partners support that. So they're fully regulated. They're secured like any other insurance company, but we just have added this nice digital customer journey and layer on top of it.
Yeah, because essentially you're like, for people know, I'm like, it's a tech stack designed to make this process simpler, right?
Exactly.
Like
Yeah.
to save the whole time so that you don't have to talk to Ted in whatever who tries to sell you insurance on 12 kids you don't have. Like, yeah, that's the whole goal. Last question for you is, I'm like, you've been around for a little while, you're doing insurance. Anything else you want to tell us about before we get into this large pile of questions that have stacked up here?
Yeah,
Which is
I'm
great.
seeing them come across.
Yeah,
I'm excited
yeah.
for them, so I want to leave time. Yeah, I mean, I'm very excited about kind of some other product offerings that we're about to launch. One that is kind of personal to me that I'm very excited about is we realized that if you think about life insurance, it's like one of the most selfless things you can do. You personally will never benefit from buying this product. There's not many kind of products out there that you just won't have any personal gain from. The only time it'll be used is after you're gone. And what we realize is when it feels like buying life insurance, you're doing something really great for your loved ones, but that it feels like a very financial kind of transactional process. So we wanted to bring a little more emotion to that. And one thing we did is we're about to launch Remember Me, which gives our policy holders the opportunity to record a message to their loved ones that we promise to deliver if there's ever a claim, so that when not only are they receiving that payout, but they're receiving kind of a really special message that you had left for them. So we'll keep that in kind of like our PolicyMe vault. We'll send you a kit in the mail, which will kind of like give you some prompts to help answer that, because creating these videos is very difficult. I try to create one myself and I'm like, I don't
Like
know
I could
even
do
know
these.
where to start. But it's one thing that we really we're constantly trying to find ways to like make this product feel a little more emotional and special, given that it is such an important product, and one that can really change lives, but feels
Yeah.
lately like a lot too transactional
Yeah.
and not too exciting.
What? Actuarial science? Transactional? Stop that. No.
Yeah.
All right. So I'm gonna get into these, okay?
Yep.
Um, and I'm gonna do it here. Um, Nina's got a couple questions. So, and we're asking you not just as policy me, but because of whatever. So I'll read them to you because now
Yeah.
I'll go through and make sure. Do you feel mortgage insurance is not necessary? Like if it's not required legally, do you like what do you think about it?
I think if you're going into buying that loan or getting that loan with the intention of paying for it with two incomes, some sort of life insurance would be important, because the outcome if you were to pass away is probably your spouse having to move, which is just like not it's you we can't help take away the grief if this event were to happen, but at the very least, we can kind of remove that financial strain on the family. So I think some sort of life insurance is important, but I wouldn't suggest mortgage insurance. I would suggest you just go look for a term insurance policy instead. It gives you a lot more flexibility.
And I think we answered about like cancer or any pre-existing conditions. And usually that question is like, if I have cancer, am I not eligible? Right? Like, and
If you're undergoing treatments, like the answer is likely not eligible. Certainly, it depends on the type of cancer. It has a lot of nuances, but I would say, it's not a forever thing. If you have recovered and shown like a couple of years of stable condition, I would encourage you to at least apply at that point.
next question is, if I have life insurance, can I transfer to policy me?
Yes, I mean, you could definitely. It depends on the policy, and you could call in and speak to one of our advisors to kind of look at your existing policy, make sure you're not losing out anything by switching over to PolicyMe. If you've been investing in like a whole life or universal life policy for many, many years, there are some reasons where you might not want to switch at that point. But certainly, we do have a lot of people who kind of cancel their existing policy because they see that they can get it through PolicyMe cheaper, and we support them in that process.
That's just an interesting insurance question. Long COVID, right? In terms of
Yeah.
pre-existing conditions, this says like, can you talk about how life insurance considers that? And maybe not even policy me, but like that's going to be a new thing for insurance to tackle, right? Because it's the thing.
Yeah. COVID was really interesting. I thought it would create big rumbles. I think insurance companies, to their credit, got a lot more comfortable with it faster than I expected them to. So even now, I think if you're currently have been diagnosed with COVID in the last 14 days, they might say like just give
Yeah.
it a week and apply then. But with long COVID, I'm not personally an underwriter, so I can't answer any of these with like definite
No, yeah.
accuracy, but I don't foresee that being a condition that would be make you uninsurable. I don't see that being too big of an issue, but again, you can apply. We always get underwriters to kind of like answer you within 48 hours if you do have questions related to this. So certainly feel free to call in or email us, and I'm sure we can get you that answer quickly.
Next question is, okay, let's say they get a policy and then they get a diagnosis. Can the insurance companies take that policy away from them?
No, yeah, that's the key here is yeah, even like if you pick up skydiving 10 years later after having
Right.
your policy, that's not something they're gonna like force you to look at. As long as they're approving you at time of application, doesn't matter what happens after that, you're still approved, you're eligible for that policy. So it is typically encouraged not to wait too long because you always have that risk of kind of developing something making you ineligible for life insurance. So it typically is recommended to get it kind of when you need it for sure.
Yeah.
Don't get it before you need it. But if you need it, don't wait too long because you're always running that risk that if you wait too long and get diagnosed with something, you might be ineligible for it.
Right. Okay. Smoking. How long do you need to be an ex-smoker to be an
12 months. They want
12 months?
12, they want to see 12 months of no nicotine. And when they say no nicotine, they mean no nicotine. So no patches and no, not like a one off kind of
Yeah.
smoke. They really want you to say no nicotine for 12 months, but then you're eligible for non smoking rates.
Okay. It says my husband's a big guy. What are the chances life insurance will need an exam? People are really against these exams. I'll be honest. Like they came to our house, right? Like it wasn't like that bad, right? Like
Yeah. I think I could be wrong, but if you go and just do a BMI check where you can just go on a calculator online, if it's over 40, I think you might need an exam. Don't quote me on that, but I think that's relatively where the cutoff. But certainly, yeah, like you said, even people who do exams 80% of them are approved. So it doesn't mean that like your chances of getting insurance are gone if you do need an exam. It just means they want to look at a few more things a little more carefully.
oh, this is one that gets asked up with it. If you get term insurance and then convert a portion of the term as permanent, I don't even think you can even do that.
You can do that with some policies for
Okay.
sure. This is this is something that brokers typically will sometimes push. They again remember they're going to get a commission on that conversion. This is something people might do later on if they just want some small amount of permanent at like kind of near the end of their term insurance policy where they want some small amount of permanent insurance for final expenses. Again, we recommend, like if there's a point where you decide to retire and you have enough savings to support that retirement, you probably don't need an extra $35,000 in 20 years when you do pass away to pay for your funeral. Like I would imagine your savings would cover it. But that is an option that some people are looking for.
Um, I'm going to do this because several people ask this. So if you have insurance at work, like if you
Yeah.
have work insurance, and I will say this, and sometimes it's not enough. Can you get like add-on? Like, is it okay to get add-on insurance? Like, is that like,
Yeah, definitely. That's what we recommend is kind of like you can factor that in. There's some like trade-offs where that insurance through work is not portable, so it is tied to you being employed. So if you're banking on it, if you ever leave that job and you don't go to a job that has the same amount of coverage, you may lose it. But I think generally bank it as something that's part of your total coverage and just look to top up on it beyond that.
okay. If you've been declined for life insurance through a work policy, like no medical, is it unlikely you would get insurance?
Uh, I would always encourage you to apply. Again, that's why we try to make it like frictionless because it's like, well, why not?
Yeah, right.
Is there any downfall to applying? I can't answer that. I do know it depends what you were declined for probably the first time, and whether it's been a really recent decline. But I would definitely encourage you to try if you think you really need it.
That's the end goal here, people. I'm like, yes. So Nina said this. I'm like, if it's the 4-hour phone call with Steve at whatever, and it's going to be annoying to do the process, but like this process actually isn't annoying, right? Do it at soccer practice. Just like
Yeah.
do it so at least like that question is answered and you've tried and you've been like, oh well, like fine. But if it's yes, then you're like, okay, and then you have some numbers to play with so that at least you can make a decision. So like no one's harassing you if you do apply, like no one's like forcing your hand to do that. It's just an online application. So it can't hurt to at least see. And then you have the numbers to go back and be like, okay, I got a quote for, 40, I don't even know, $40 a month or something. Like, is that something I want to do? And you can make those choices. But if you don't have the answers, it's hard to make choices, right? Okay. If you get additional coverage over and above your employer coverage, do you just purchase a smaller package? Is there ever an issue about which policy responds first, or when one policy declined coverage, is there another policy? That's a lot of questions all in once. Basically, the question is like, if I have a work thing, like, and
Yeah. You can get a separate policy beyond that. There's no issue with like first to claim. Like if you have to claim, you can get two separate payouts and there's no issue with you having another policy that would make your work coverage like ineligible to claim for it or anything like that. They would be two separate contracts with two separate insurers and both would pay out that claim if you needed it.
Is there an average cost for the underwriting process? So basically, I think she was just asking is like, what do you pay to PolicyMe other than this monthly fee? Are there hidden fees?
No hidden fees, no taxes. Like the price you see is going to be the monthly premium that comes out, and it's flat for the full term of your policy. So it's not going to increase over time or anything like that.
Shockingly, the insurance industry has created trust issues. Shocking, which is why you're doing what you do. Someone asked about LTV, which we can talk about at the end because it's like a totally different. I'm like, that's actually my area of expertise is like short-term, long-term. So I'm
totally different policy. Yeah, it would not replace long-term disability at all.
Okay, when choosing among different insurance companies, will the claim processes be a factor to consider? Don't want to add stress to my family with regard. So if someone passes away, right? Like, is there's different things to consider on how they're going to process your claim? Like, so, yeah. What happens when someone passes away? What does that look like?
So again, I think the insurance industry gets a bad rap, and usually that comes from like the auto and home and property and casualty side. The truth is life insurance payout rates are around like 99.8%. They're very, very high for fully underwritten policies, and the reason for that is that there's just, as anyone who goes through the application process is like, they don't let you not tell them anything. Like they are doing a very thorough underwriting review at time of application, and that transpires into a much more confident and defined period during the claims process. Personally, we're doing a lot to try and improve the claim side of the process too. With our current product, we've had one claim so far. It's been paid out. I think it's something that we're kind of looking at and thinking about. Okay, what else could the family need during those times in terms of other resources to help think about even once they get that big payout. How are they going to use it? Do they need some financial advisor support to help them think through budgeting and things like that? But generally, if you're thinking about just like your confidence in getting that claim paid to you, you can be pretty confident across the industry that there's the same standards. There's very highly regulated industry, very difficult for insurance companies to do anything sketchy at that point.
Yeah, sketchy. So I think people are a little bit like, I had a question that was just to me. It's like, which I think was not meant for just for me, but explaining the underwriting process. So I think like, I know what underwriting, you know what underwriting, but people are like, do they do a special math dance? Is there something specific they're looking for? Like, what do the underwriters do?
Yeah, so if you just think about life insurance, it's covering mortality risk. So what they're really looking to see, like, what's your likelihood of passing away during the term of your policy, and let's find the right price against that risk. Right. And so what could be something that would cause you to pass away? There's obviously this underlying like accidental death that would be like evenly distributed for everyone, but for any individual, the key risks that they're looking at is medical, so some sort of family or health history that shows that maybe you could develop kind of a diagnosis in the next 10 or 20 years that would make you higher risk and higher likelihood of passing away. And then the secondary thing is just hobbies. So we do ask a lot about like extreme hobbies, motor vehicle records. If you've gotten in a lot of car accidents, unfortunately, you might be like a higher risk individual and have to pay a little bit more for your insurance. If you're like a pilot or someone whose profession involves them being on the road 8 hours a day in a car, like you could be a bit higher risk. So they're really just asking questions related to that. In certain scenarios where you have a medical history, meaning maybe you in the last like 5 years ago you had this diagnosis, you had a heart attack, for example, they may want to like find out a little bit more about that heart attack. Just make sure that the condition was stabilized and there's no current investigations or worries that that may cause something else in the future. So they're really just kind of sussing that all out. It comes in the form of a questionnaire at the starting, which is our application, and then post that it could be a follow-up question or it could be a follow-up medical exam, or they could actually request your doctor's records. But it's nothing to worry about. It's something we kind of do on your behalf. We keep you informed the whole time, but it's not something that you need to kind of spend too much time worrying about while you're in the underwriting process.
This is about smoking. My husband is a casual smoker. Unfortunately, is there any distinction between casual and full-time?
No, unfortunately not.
Yeah.
One cigarette in the last 12 months would make you a smoker.
Right.
Yeah.
Yeah. So it's and any nicotine use, whether you're vaping or you're slapping patches on yourself just cause, or like, and when they say the last 12 months, like they're serious, right? Like if like that,
you don't want to misrepresent yourself there. Right. No, definitely not.
Yeah. And then the rates are substantially higher.
Yeah. About double. Yeah.
Okay, internet is cutting out. I don't think I've ever heard of this. Someone says, does your policy for a parent cover loss of life for stillbirth?
I would have to double check. I don't want to answer on the spot, but I will, if you email me, I'll just put my name in the email. I can definitely answer any like very detailed questions about our policy contract there. Yeah.
Okay. And we answered the work insurance question. I know sooner the better, but what is the good age to apply be insured before? The answer is now. I'll answer that, but you can answer now. Yeah.
Yeah. I mean, if you need it, it's now for sure. If you have no dependents, I mean, in this group, if we're all moms, like we probably need it. And so I would say like definitely as soon as possible.
And the reasoning behind this is like, if you apply now and you're younger, like at a younger age rate, I think people need to be aware of this. Like those prices go up as you get older. Yes.
Yeah. Definitely. Every year they go up.
But if I lock in at 30, right? Does my rate stay lower, or how does the increase, like, do I get a better rate if I lock in now and when I'm 40? Like, how does that work? Now I'm just,
Yeah, I mean, your rate is fixed for the whole term, like, so definitely it will be lower if you buy a 20-year policy today than if you buy a 20-year policy next year. Yeah.
See there, I was like, how do I like make this? I'm like, yes, I'm like, it's a flat rate, right? Like, so applying here will get you a lower rate. Like, so it's a good idea, right? Yeah. And it's really like 40 to 41, like if you're 40 now and you're turning 41 in like 3 months, like you're going to get a lower rate.
Yeah,
right?
Exactly.
Yeah. Okay. How do I transfer? We did that one. I don't think so. If we transfer from one policy to another, will it take into account when I applied to my previous policy? No, it restarts, right?
No, unfortunately not.
Oh, see here, it says, thank you so much. This was incredibly helpful. As a young family who just bought our first home, we have found insurance pushy and impossible to understand.
No.
This is our goal of doing this. Look, Laura is not pushy and not difficult to understand. So on that fact alone, you should probably go with the person who's not pushy and making your life difficult. Someone says, oh, I've been getting totally ripped off. Looking forward to moving over. Okay. Unfortunately, that's not funny, but that's it. Someone asked about, okay, now someone's working with the smoking thing. What if you pick up smoking after filing as a non-smoker? Could you have issues making a claim?
No. No, as long as you're completely truthful at time of application, yeah, no issue. Again, you can similarly pick up some crazy hobby, and it'd be fine. The only exclusion that's literally standard across the industry is suicide in the 2 years after you apply. So there is some anti-selection risk there. So if that's the cause of death in the 2 years after you get the policy, then you wouldn't be paid out. But even if it happens well after that, then it would be paid out. But
Does
yeah,
that vary on
certainly there.
policy though?
Pardon?
Does the suicide rate depend on policy? Like some policies pretty blanket, like if you end your own life?
No, no, no. It's like the industry as a whole. It's only the 2 years after you apply. It's a very standard. Yeah. Again, they're not looking to pick and
Yeah.
choose certain deaths. Like,
Yeah.
if you pass away, they really want to be able to pay and support your family. Yeah.
So someone says, if you've recently been cleared of a medical condition, does that alleviate concerns from the insurer, or does there still need to be a period of time that passes?
Depends on the condition. I think if it's yeah, I'm not an underwriter again. I think there are some situations where it's like, yeah, okay, that's great. Like I'm glad you're recovered and we're good. And there will be some where the condition actually has precedence for like reemerging, cancer being a big one where if there's a high likelihood that that can reemerge in the next couple of years, then they may want to postpone and see like a couple more years before, but after it emerges, that to make sure you're clear. But if not, it shouldn't be an issue.
Yeah, there's certain conditions in insurance, which was, and again, I'm happy, like I had a traumatic brain injury. Let's just say that no one wants to touch a traumatic brain injury with 10-foot fall. So there's like very specific, like everybody has such different health history or
Yeah.
different types of cancer or different types of like things that it's really hard. I'd say everything for Laura to be like, yes, that's the definitive thing because it's super specific, right?
Yeah. Yeah.
Okay. So here it is. What happened where if you're anticipating? Susanna says I have a
Yeah.
child with disabilities, right? Like
I
so then
saw that. Yeah. So that is a very good use case for a permanent insurance policy. So that your kind of your financial dependencies and your is just not going to go away. So you would definitely want to think about permanent insurance, and that you would be a very good case where that would be very valuable to you. So that's a definite case for permanent.
someone says I was denied for recent changes to a prescription for anxiety, so my insurance broker had me apply for a guaranteed approved plan. It costing me $150 a month. Now that my prescription has been stable for over a year, should I be looking to switch to a new policy?
Yeah, I think so for sure.
Yeah, I was like,
Yeah.
yeah,
That is so
yeah,
expensive,
that's
$150 a month.
ridiculous.
So I would definitely encourage you to apply. Yeah, that seems like a key case where you could be eligible for a much cheaper plan.
Okay. And Nina's now just selling your point for you. It says, let me share a personal experience. Back when I was 25 and also when I was 30, I looked into insurance, no property, no kids, but I dropped the ball and never got it. Then in my 30s, I successfully got coverage. The package is significantly more over the lifetime and term. If I had got it, like if I got what I have now back when I was in my 20s, I would save about $18,000 over the length of the term, right? For my husband, it's approximately double because he has health issues. So between the two of us. So in huge things, get insurance now if you are able before you get older and before you get health issues. Not yelling, just emphasizing. So when we send this out, we will put a link for everybody to find like the PolicyMe link so they could try like no one's telling you have to like check the box, but at least apply so you understand what the costs are involved, because this can make like, I'm going to tell you, my mom got cancer when she was 40. My dad got cancer when he was 42. Like we don't like, I had a traumatic brain injury when I was 33. We do not plan for this stuff. Like no one wants to think about it. It is uncomfortable and that's okay, but it's not going to hurt during your kid's soccer game for instead of looking at Instagram for you to apply for this, right? That's it. Tamsa says, this was super helpful. Thank you so much. Please for the session, please do another one about long-term and short-term. Okay, like I can do another one on long-term, short-term.
Yeah, that'd be fun.
That would be,
You should definitely do that.
it's so awkward. Like it's awkward because we're not primed to talk about these things. But when we have someone, like Laura, who's, she gets it. She's a mom, she's whatever, she's trying to do it differently. It's great. Nina says, this is money we could have saved for our kid for our retirement. This kills me every time I think about this. Okay. So, and it's true, right? Like it does seem like a monthly cost, but it doesn't have to be forever, right?
Mhm.
Just while your kids need it until they're
Yeah,
God willing,
definitely.
financially stable. I'm looking at some of my kids and I'm like, please. Any final questions for Laura? I wish PolicyMe existed when I applied.
Oh,
Most people
thanks
just
so
say
much,
thank you.
guys.
This was fun.
That was great.
Talking
Yeah.
about who knew talking about life insurance could be fun, but it was. So and Laura put her email address in if anybody has any really specific, like those things that we can't
Yeah.
answer over a group thing, then shoot an email. But we will send this recording out to everybody who registered afterwards so that you can share this with partners who didn't get a chance or friends who didn't get a chance to watch this because you thought it would be super boring. But thank you for showing up on your lunch hour, everybody.
Yeah, thanks so much.
Any final thoughts, Laura?
No, just thanks, Allison. It was great to be here. I admire this group so much, and what you're doing is incredible. So it's great to kind of be on the sidelines cheering you guys on and doing our best to kind of push the envelope on all your objectives as well.
Perfect. We're pushing the envelopes. So yeah, that's all I do, right? That's all I do now. So great. We will send that out for everybody who registered so you can have a look, and we'll try and put in, because Bronwyn, who is Mom's a Work member, created some of that content. We'll share Bronwyn's work.
Yeah,
Just to answer more questions, because some of their blog posts and that are really like helpful in having those discussions. When it can be uncomfortable, but it's, as Nina has said, do it now before the price goes up, right? All right. Thanks, everybody. Have a wonderful
guys.
afternoon or morning for those on the West Coast.